So this is 2008 question 1. It's an ordinary level manufacturing account. So as always, you're given a trial balance and then a list of workings underneath. So just a quick run through the trial balance. So you've got your ordinary share capital that goes at the bottom of the balance sheet. You've got your plant and machinery, and you've got your cost there in brackets, and the figure that's in the trial balance is the net book value. You've got your factory buildings at cost of €600,000, and you've delivery vans. Again, you've got the cost in brackets of 92,000, and the figure that's in the trial balance then, the 68,000, that's your net book value. You've got patents of €75,000. That's an intangible fixed asset that goes into the balance sheet. You've debtors and creditors. Debtors is on the debit side, the 41,600. That's your debtors figure, 41,600. And your creditors then 29,500. Also, everything that's in the debit column is either an asset or an expense. And anything in the credit is either a liability or a gain. Okay, so when you're looking at anything in the debit column, you should know automatically it's either an asset or an expense. Okay, and then similarly with the credit side, it's either a liability or a gain. Okay, then you've got your opening stocks. You've 3 opening stocks: raw material and work in progress both go into the manufacturing account, and stock of finished goods goes into the trading account. You've got factory wages of €130,000. They're going to go into the manufacturing account because it's got to do with the factory. You've purchase of raw materials. So when you're looking at a manufacturing account, it means that they are making the product themselves. Okay, a lot of the companies that we would have, all of the companies really that we would have done in Sole Trader and Company, they would have been buying in the product, but these manufacturing people are making the product themselves. Okay, so they're purchasing in the raw materials. So for example, raw materials for making a table would be wood, metal, screws. Okay, direct expenses then, they're going to go in as a direct expense, in a direct cost in the manufacturing account. Sales of 980, that is going to go into the trading account at the top where it usually goes. Returns in means sales returns, okay? And another way to recognise that is, if you see here you've got your 980, your sales on the credit side, the returns are on the opposite side, which means that they're sales returns, okay? So 3,400, they're sales returns. Sale of scrap material then is €8,000. That goes into the manufacturing account, and the manufacturing account, that's going to go in as a minus, okay? And I'll explain that when we get to the manufacturing account. Directors' fees of €36,000. They're going to go in as an admin expense. You've got factory insurance of €18,000. That's going to go in as an indirect expense in your manufacturing because you see that word factory. You also have factory light and heat of €43,400, also a manufacturing account expense, so it's going to be indirect. Your profit and loss balance at the end of the year, 87,000. That's going to go in at the bottom of the profit and loss account. Your debentures of 10%, so a debenture is a loan. We currently have a loan out. We got it on the 1st of April, okay, and it's €200,000, and we have to pay, that 10% means we have to pay 10% interest per year. VAT, you need to always check your VAT and see what side it's on. On this side, it's on the credit side. As I said before, anything on the credit side is either a liability or a gain. VAT always goes into the balance sheet, so that means it's a liability, okay? So that VAT is going to go in as a current liability. Stationery is an expense. That's just going to go in as an admin expense. Then you've got a provision for bad debts already of €2,800. In this question, we're not asked to adjust that. Okay, so you're going to continue on with that figure there of 2,800, and that's going to be taken away from your debtors in the balance sheet. Bank then, you always need to check and see what the story is at bank. Check and see what column it's in. If it's in the debit column, it's an asset. If it's in the credit column, it's liability. So in this question, we have it on the credit column, €27,300. That means it's a bank overdraft. We owe the money back to the bank, and we're going to have to pay them back within the next year. So that's why it's on the credit side. Make sure you put that in as a current liability. Advertising then of €7,000. That's going to go in as a selling and distribution expense because advertising is related to selling. Okay, and that is your trial balance. Then you're given 7 workings. Some of them you actually have to do workings for, like write out workings. Others you don't need to. So they're starting off with stock. It tells us the 3 different stock figures. Next, they ask us to depreciate the fixed assets. We've 3 different assets to depreciate: plant and machinery, delivery vans, and factory buildings. Then we've to split out the wages between direct wages and supervisors' wages. Calculate the interest for debentures. figure out what the story is with factory insurance because it's paid up to the end of March next year. And then it tells us that our goods are transferred at current market value of 700,000. We'll see that as we go through the question. I'll explain it a bit further. And then we've got corporation tax of €12,000. So one thing that you need to also be careful of is the year. Okay, so make sure you're looking. We're doing for the financial year of the 31st of the 12th, 2007. So when you see something like this, 2008 thing here, that means that is paid up until next year, okay? And at this point, you're ready to do your workings. So you're now starting the workings. So the first one is stock at the end of the year. So you know it's the end of the year because it's the 31st of the 12th, okay? And you have 3 different stock figures given to you. You've got raw materials, work in progress and finished goods. The closing stock for raw materials 49,000, work in progress 23 and finished goods 74. So all I've done in the workings is I have labelled where they're going. So you don't even need to really write this down, but I just put it in for just to show you. Okay, so raw materials goes into the manufacturing account at the top with the raw materials, so opening stock of raw materials and your purchases of raw materials. And the second place is your current assets in the balance sheet. So you always would have put your closing stock, even when you were doing your sole trader and your company accounts, they would have went into the balance sheet. Okay, so it's no different for these ones. Work in progress stock, that goes in at the bottom of the manufacturing account and again into your current assets in the balance sheet. So raw materials and work in progress are both in the manufacturing account. Finished goods then, they're the completed tables, the finished product, okay? They're going into your trading account and into your current assets in the balance sheet as well. So in your balance sheet, you're going to have 3 different stock figures, your 49, your 23 and your 74. And the manufacturing then, into the manufacturing account, you're putting the raw materials and the work in progress. And just in case you don't know what work in progress is, it means that when these accounts were being done, okay, at the end of the year, they had 23,000 worth of tables that were only half made. Okay, that's what work in progress means, work that's in progress. Okay, so they're not fully made tables. So they're not just raw materials, so they can't be included in raw materials, and they're not finished. So we have this like halfway house called work in progress. Okay, now you're on to your second working, which is your depreciation. So you have to depreciate plant and machinery at a rate of 20% of cost. Okay, so to get that, you go up to your trial balance and you check and see what your cost figure is. So I'm doing plant and machinery, so you're looking here, here's your cost figure, the €440,000. So you're going to get 20% of €440,000, so we're looking here, and that is €88,000. Okay, then you need to add in your previous depreciation, so back up to the trial balance. We don't know what the previous depreciation is. The 440 is given to us in brackets, and this figure here of 380 is your net book value. So you take those two away to find out what your previous depreciation was, and that's €60,000. So you're adding your 88 plus your 60, which gives you a new accumulated depreciation of €148,000. So the charge for this year, the €88,000, that goes into the indirect expenses in the manufacturing, because depreciation is not directly related to making the tables. So that's indirect, okay? And then your new accumulated depreciation, that goes into your balance sheet and you take it away from your fixed assets, okay? Then you've got your delivery vans, okay? You're asked to depreciate, we're looking back up here now. Delivery vans, you're depreciating 10% of book value, okay? So scroll back up and see what the story is, okay? Delivery vans, you're given the cost of €92,000 and the book value is the 68 in the trial balance, okay? Sometimes you can have delivery vans at cost and accumulated depreciation, but in this you have your cost in brackets and your 68 is your net book value. So going back down here, we've got 68 by 10%, which is €6,800. Delivery vans are used to distribute goods, so it's going in as a selling and distribution expense in the profit and loss account. So that's not going into the manufacturing account. Then you're following through with the same step. You've got to add on your previous depreciation. So I'm getting that from subtracting the 92 minus the 68, which gives me €24,000. So 6,800 plus your 24, which will give me a total of €30,800, and that gets taken away from the fixed assets in the balance sheet. Okay. Next is factory buildings depreciation. So you're asked to get 3% of cost. Okay, so scroll back up. Let's look. Factory buildings at cost €600,000. So we're getting 3% of that. 600,000 by 3%, which is 18,000 euro. It's factory buildings. Factory buildings has got to do with manufacturing, so it's going to go in indirect expense in the manufacturing account. Okay, then you need to go back up and check and see what your previous depreciation is. We've got no mention whatsoever of depreciation, which means we've never depreciated it before. So I'm just following through with my step anyway. And if you want to get into a good habit of adding that in, so that means that you'll always be checking to see if there is previous depreciation. So 18,000 plus 0 equals 18,000, and that's your fixed asset in the balance sheet. You're going to take that away. Okay, and that's the standard across all three, so your sole trader, company and manufacturing. Next adjustment is on factory wages, where we're asked to divide it 75% for direct wages and 25% for supervisor wages. And the reason we're doing this is because this 75% is directly related, and that needs to go above what we call the prime cost. Okay, it's a direct cost. So I'm taking my 130,000 euro from the trial balance, just if you're looking for it, it's your factory wages here of 130, and you're splitting it. Okay, so get 75%, and that's 97,500, and that's the direct cost in the manufacturing. And then your supervisor's wages is 130 multiplied by 25%, and that's 32,500. So what you need to be doing is adding these two up. So always check and see if you add these two together, you should end up with 130,000 euro. Okay, which we do by adding those two together. And that is that working completely finished. So that's all you're doing for there, is just splitting it out. Working number 4 then is provision should be made for debenture interest due. You know, a debenture is a loan, okay, and if you get a loan off any financial institution like a bank, you will have to pay an interest. And we went through this when we were looking at the trial balance. So we have a loan, this business has a loan of 200,000 euro, and we have to pay we have to pay interest of 10%, okay. But look there, we only got the loan on the 1st of April. So you need to calculate how many months you actually had it for. So you're multiplying the loan amount by the percentage and multiply by the amount of months that you had it for. If it doesn't say anything about acquiring it during the year, you just get the full 12 months, okay? So into my calculator, 200,000 multiplied by 10%, which is the interest rate, multiplied by 9 months. So we got it on the 1st of April. So we had it for April, May, June, July, August, September, October, November and December, which is 9 months. You should always be calculating that out on your fingers, okay, and that gives you 15,000 euro, and that's going to be subtracted, that's why I have that in minus there, from at the bottom of the profit and loss, okay. Again, similar to your previous depreciation, you always need to check and see if you've got any paid. So you should be looking in your trial balance, check from up and down, does it say interest paid anywhere? No, it doesn't in this question, but I followed through anyway just to show you. You should always check and see if you've got any paid. In this one we've nothing, so 0. And then that means we still owe 15,000 euro, and that's a current liability in the balance sheet, and that's your double entry. So it's been subtracted at the bottom of the profit and loss, and then it's put into your current liabilities in the balance sheet. And the last adjustment that we actually need to do out is my factory insurance for the year. Factory insurance was for the year ended 31st of the 3rd, 2008. So you're going up to your trial balance and find the insurance, okay? So factory insurance, here it is, 18,000 euro. So basically that means that they paid their insurance figure amount on the 1st of April, okay? And they paid it for a full year. Our year end is I highlighted it earlier on, it's the 31st of the 12th, okay? It's here. So that means if we have our insurance paid up until the 31st of the 3rd, that means we've got 3 months paid for next year. And the accruals concept says that if we have it paid for next year, it cannot be included in this year's figures, okay? So from the trial balance, I'm now looking at this work in here. From the trial balance, we had 18,000 euro, okay? Find out what 3 months that is. So 18,000 into your calculator, multiply by 3 over 12, which means the 3 months, the amount of insurance for 3 months is 4,500 euro, okay? And that's the amount that they have prepaid. So that can't be included in this year's figure. So that's why I subtracted it from the 18,000, and it left me with 13,500 euro charge for the year, okay? So my current asset is 4,500 euro, and that's because that's a good thing. I'm paying that in advance, okay? So current assets is where the good things go. So if you ever hear me saying, is that a good thing or a bad thing? A good thing is an asset, a bad thing is a liability, okay? So that leaves me with my charge for the year then of €13,500. It's factory insurance. So when you see factory straight away, you should know it's manufacturing account. Insurance isn't directly related to making the tables, so it's an indirect expense, okay? And the only other two things that's left is finished goods are to be transferred from factory at a current market value of 700,000. And I'll show you what you need to do with that when you're doing your manufacturing account. And then the provide for corporation tax of €12,000. I should have actually written that in here. It's I'll just write it here now. Corp tax, and the charge is 12,000. 12,000. We haven't paid it yet. Okay, so the first place that needs to go is at the bottom of the profit and loss as a minus because it's tax. We haven't paid it yet. That's not good for the business, so it's a current liability in the balance sheet as well. Okay, and that's that work, and that's number 6. Okay, I didn't write that in. So at this point then you are ready to go on and do your manufacturing account. Okay, so you need to rule out your 3 pages, your 3 lines. We will need 3 pages as well. So this is the marking scheme for the answer to the manufacturing account. Okay, so we'll talk through it to explain where the figures are coming from. So you need to, first of all, you need to have your correct heading on it, manufacturing account of Casey Limited for the year ended 31st of the 12th, 2007. So it's year ended. So year ended is what you use for your manufacturing account and for your profit and loss account. Okay, so you've got your year ended in your profit and loss, but in the balance sheet is as at. Okay, so the balance sheet is just a picture on that day, okay, on the last day of 2007, whereas the other two is all the figures for the whole year. So you're starting off with your opening stock of raw materials, which is coming from the trial balance. So you're looking at the trial balance. Wait till I just scroll back up here. This figure here. So any of the open stocks are coming from here. So open stock €58,000, okay? So that's going in, you're getting 3 marks for that. Then you're adding your purchases, that's coming straight from the trial balance as well, €344,000. Then you're taking away your closing stock of 49,000, and that is coming from underneath the trial balance where you get your closing stocks, okay? And you know it's closing stock there from the 31st of the 12th, okay? And that's your cost of raw materials consumed, okay? So your opening stock plus your purchases minus your closing stock, and that's your cost of raw materials consumed, or if you want to say used, that's fine either. Then you've got you have to add your direct costs. So you can put a little heading in there saying direct costs. And you've got your factory wages, which is coming from the adjustment where we split the wages 75% and 25%. So 75% is your 97,500, which we had in the workings. Then we've our direct expenses coming straight from the trial balance of 38,000. So you can see there, because of the working, you get an extra 2 marks. So you've got 4 marks here, whereas you only have 2 for the direct expenses because you didn't do any work for that. So you're adding your 353,000 and then your 2 direct costs to give you what's called your prime cost, and you're getting 1 mark for actually stating that's your prime cost. Okay, so make sure that you've got that word in there, prime cost. So the prime cost is your total of all of the direct costs. Okay, then you're going in with your factory overhead. Okay, so add factory overheads. These are your indirect, so anything that I've labelled as an indirect expense. Okay, so you've got factory supervisors' wages, which is what you've split. So it's the other part of the factory wages, 32,500. That's coming from the workings. Factory insurance, we also adjusted that because we had some paid for next year, 13,500. Factory light and heat, that's coming straight from the trial balance. You're only getting 2 marks for that one, €43,400. Then you've got your depreciation of plant and machinery of 88 and 18,000. We got both of those from our workings as well. You're adding all of these guys up, okay? Add them up and it brings it to 195,400. That's your factory cost, okay? You need to add that, okay? You're adding these 2 figures to get your factory cost of €683,900, okay? Then you're adding your work in progress. So at the start of the year, you had some tables that were half made. So they were obviously made, finished, they were completed during the year. So you're adding your opening and you're subtracting your closing. You don't need to do this subtotal here, okay? You can just put them in one after each other. So add your opening, take away your closing. So you're adding 33,000, okay? So that's an add. And you're taking away your 23,000. So the brackets signifies that it's been subtracted. Then once you've got your to €693,900, this is it here, you're taking away your sale of scrap material. So you're reducing your cost by selling some of that. So just say you're in the business of making tables, you'll have pieces of wood left over and it's getting rid of that. It's selling those scrap bits. That's what sale of scrap material is. So you're reducing your cost by selling that scrap material. So that's why it's subtracting, okay? Another example would be if you were making t-shirts and you had a bit of fabric left over and you sold it on. That would be the sale of scrap material, okay? So you're reducing your cost and that's why you're subtracting it. So that brings us then to the cost of manufacture. In some questions, that will be your end point. But in this question, I'll just draw your attention to the fact that it says, this part here, part 6, it says finished goods are to be transferred at from factory at current market value of 700,000, okay? So you've finished at €685,900 and that's the cost of manufacture, okay? What you should do then is I'll just put a line through this for the minute. You should be skipping a line there, okay? You should skip a line there, okay? So once you get to cost of manufacture, skip a line and then put in transfer at current market value, okay? Transfer at current market value, and that's your 700,000. So you're given the 700,000 in the question, okay? Sometimes they won't have given you a current market value, and that means you just end at your cost of manufacture, okay? But when you're given it, once you get to cost of manufacture, skip a line and then put in transfer at current market value. And then you work backwards. So what you need to do is, you're going to have this cost, then you skip a line and you put in your current market value. And then you need to take it away, work backwards. So you need to find out that middle figure. So it's going to be your 700 minus the 685,900. And that will give you a figure of €14,100, and that's a profit, okay? So 14,100. Sorry, 14,100. Okay, so basically what that means is these tables cost you €685,900, this figure here, but they're actually valued at 700,000, okay? So if you were to sell them on the market, or if you were to buy them instead of making them, they would have cost you 700. So you have made a profit of €14,100 by making them yourself. That's what that means, okay? And that's that account done. So just to recap, you put your cost of manufacture in, skip a line, put in your current market value and work backwards to calculate your profit, okay? There will never really be a loss, but if there is, you just need to put it, mark it as a loss on manufacture, okay? Then you're going on your second account, so 2 out of 3, if this is the second of 3, it's your trading profit and loss account. So it's standard enough stuff, except for a few little things because of the manufacturing, okay? So you're starting off with your sales of €980,000, you didn't adjust that at all, and you're getting 6 marks for it, €980,000. Then you have your sales returns of €3,400. They were on the debit side. I flagged that when we were going through the trial balance. You're subtracting the sales returns, which is giving you a net sales of €976,600. Then you're going less cost of sales. You're starting off with your open stock of finished goods. Okay, finished goods. That's the only stock we haven't put in at this point. So your stock of finished goods, open stock, coming straight from the trial balance, €64,000. Now this is usually where you put in your purchases. Okay, but you don't have purchases because we're not actually purchasing in the products, we're making them ourselves. So you're bringing down your cost of manufacture. Your cost of the market value. So you're bringing down your last figure, okay? So it's your €700,000, you're bringing it down. So whatever your last figure is when you're doing your manufacturing account, that's what goes in place of your purchases, okay? So you're adding your 64,000 plus your 700,000, which gives you 764,000. And you're taking away your closing stock of finished goods of €74,000. That's coming from underneath the trial balance, which means your cost of sales is €690,000, and you're subtracting that from the €976,600. Subtract it, and that gives you a gross profit of €286,600. Okay, so that's your gross profit there. At this point, you add in your manufacturing profit. Okay, so your profit on manufacture of €14,100, you're adding it in here. Okay, if you're not given a current market value, you don't put that in. Okay, so if you're given a question and there's no current market value, you put your cost of manufacture in here, and you don't put in a manufacturing profit. Okay, so you need to remember that. Next stage then is putting in your expenses. So less expenses. You're always going to only have a few in here because you have to do the manufacturing account. So you wouldn't have as many entries here as you would do if you're doing a sole trader or a company account. So your admin, you've got stationery of 5,400 coming straight from the trial balance, and you also have your director's fees of €36,000. You're adding those together to make €41,400. And just note there that you're getting 1 mark for writing administration and another mark for writing selling and distribution. Okay, so they're easy marks to be getting. Okay, so don't be forgetting those headings. Your selling and distribution, then you've got advertising, which I flagged when we were doing the trial balance, when we were going through the trial balance. That's €7,000, and you've got depreciation of delivery vans, which we did in the workings, of €6,800. So that brings your total of selling and distribution to 13,800. Then you need to add that to the 41,400 there, and that's bringing your total expenses to €55,200. Okay. You're taking that away then from your gross profit. Okay, so your gross profit, well, sorry, this figure here, the 300,000, because you added your profit in there. So that was our profit so far, but then we had to pay all of these expenses of 55,200. So I'm subtracting those, and it's given me an operating profit, of 245,500. And this then is when your interest goes in. So we have our interest, debenture interest, that has to be paid as well. So you're taking that out, and that gives you your net profit for the year. And then that profit is taxed. Okay, and that's our corporation tax, which was the one that I wrote in there when we at the very bottom of the working. So €12,000 gets taken out there, which leaves your profit hanging there at €218,500. Okay, you're bringing your profit and loss balance of €87,000. So I'll just go up and show you there. You're adding that in. Okay, so when you're looking at your trial balance, you're adding it in if your profit and loss balance is on the credit side. So this is it here, this 87,000. Okay, can you see? Yeah, 87,000. It's on the credit side, so you're adding it in, which means that if your profit and loss balance is ever on the debit side, it means you need to take it away because they've been making a loss up to this point. So what that means is, at the start of this year, we had a profit and loss balance. We've built up a profit of €87,000, okay? And this year, we had that 87,000 plus the 218 from this year, which leaves us with a closing balance, profit and loss balance of €305,500, okay? And don't mind these are just your workings, but I did those with you already. The last thing then is your balance sheet, okay? And this is standard enough, there's nothing new here, so we'll just fly through this. You're starting off with your intangible assets. It's fine if you put them underneath the fixed assets. That's the way I do it. So intangible assets, you've got patents of 75,000. That's coming straight from the trial balance, which I labelled when we were going through. Then you've got your fixed assets. You've got 3 columns, one for cost, one for accumulated depreciation, and one for the net book value. Okay. You've got 3 assets: plant and machinery, delivery vans, and factory buildings. So they're all going in at cost price: 440 for plant and machinery, 92 for delivery vans, and 600 for factory buildings. Your accumulated depreciation, I flagged all of those when we were doing the workings, okay? And your net book value then is your cost minus your accumulated depreciation is equal to your net book value. So, for example, they're looking at plant and machinery, you've got 440 minus your 148, which leaves you with a net of 292. Okay, so then to carry through, we're just going to add these guys up, and that gives you the 935,200, and they're adding the 75,000 to give you €1,010,200. Okay, then next it's going in is your current assets. So you've got your 3 closing stocks, which are underneath your trial balance. I also actually labelled those and went through them when we were doing the workings as well. We didn't actually have to adjust them, but I did explain how it works. So you've got 3 closing stocks. You've raw materials, work in progress, and finished goods. So make sure all 3 are going in, and they total up to €146,000. Then we have our debtors of 41,600 less that provision. Now, we didn't actually adjust the provision, so make sure you're not forgetting to put it in, okay? And you're subtracting that. So I'll just put brackets around that for you, okay? So it's, oh sugar, it's your 41,600 euro minus your 2,800, okay? You're subtracting that to get 38,800 euro. And then the only other current asset we have, these are the good things, insurance prepaid of 4,500, and that's coming from the workings, okay? And I'm adding those three together, so I'm adding these three to give my total of 189,300 euro. Next then is my current liabilities. So what do I need to pay back within 1 year? So stuff I need to pay back within 1 year. Creditors, people I owe money to because I bought stuff on credit from them, for 29,500 euro. Taxation, I did that in the workings. I never paid it, so it's due 12,000. VAT coming straight from the trial balance. I flagged that when we were going through the trial balance, 10,200. Bank was sitting on the credit side, so that's a bank overdraft, 27,300. I also flagged that when we were going through the trial balance. And then the debenture interest due, I haven't paid any of my interest, 15,000 euro that I need to pay, so I'm putting that in there as well. So I'm adding up those 5 things, which means I owe 94,000 euro within the next year, okay? So up here, I'm going to have 189,300 euro coming in within the year, and I'm going to have 94 going out, okay? So that's good. I've got more money coming in than I have going out. So what I'm doing here is 189 minus the 300, 189,300 minus the 94,000, which leaves me with 95,300 euro. So basically, when I get this money in, I'm going to have to pay this money out, and this is what I'm left over with. Your working capital is what you're left over with after paying your short-term debts, okay? So my working capital then is added to this figure up here, and I'm given a total net assets figure. So my first balance, what I'm working towards down here, is getting this same figure here. So 1,105,500 euro. So that is the value of the business, okay? Now, next part is, well, where did I get my money from to have this business? So first of all, you're putting in creditors amounts falling due after more than 1 year, okay? So after more than 1 year, which basically means what do I need to pay back after 1 year? Well, we have a big, huge loan sitting there, so 10% debentures. So you're putting in here, you're putting in the debenture itself, okay, the actual loan, the 200,000 euro. You're not putting the interest, you're putting the actual loan, okay? So I have a loan of 200,000. Where else did I get the money from? Don't forget about those shares that's in the trial balance. So we've got ordinary shares at €1 each, and we've an authorised amount. That means what's the maximum amount that we can issue, and then we have an issued amount. How many have we actually issued so far? So our authorised amount is 800,000 euro, and we're not going to go any further with that, so you can double line that, okay? You're only carrying forward with the issued. So you need to show the authorised amount, you get a mark for it, but you don't actually carry on your sums as such with it, okay? So we have 600,000 euro coming in from shareholders, and we also have the profit. We have a profit balance of 305,500. So you're adding those two together to bring capital and reserves to 905,500, and then you're going ahead and adding the 200 to that, and that brings it up to the balancing figure of 1,105,500, okay? And that is the balance sheet. So that's how it works, okay? So you're starting off with your manufacturing account. That's totally new. That's totally different. In your trading profit and loss account, the only thing that's really different is this part here, okay? It's the fact that you've got no purchases, okay? So you need to be careful of that. Instead of having purchases, you're going to have the cost of manufacture, and then you might have to put in your manufacturing profit as well. And then for the balance sheet, that's totally the same, okay? Nothing has changed on that. So it's just practice. You need to keep practicing it, and you can use this video to help you with any question that you might get in ordinary level manufacturing.